All right, let's get right into it. Today, we're digging into a really powerful and honestly pretty provocative argument, one that claims the entire crypto industry isn't really the future of finance at all, but instead, it's the single biggest scam of our generation. So let's dive in. The source we're looking at today kicks things off with this, well, pretty sharp analogy to set the tone. The idea here is that crypto presents itself as this huge, revolutionary thing, but maybe, just maybe, the reality is a whole lot less glamorous. And yeah, as you can see, the source is not mincing words here. This is the core thesis laid out plain and simple. So for the rest of this explainer, we're going to unpack the evidence and the arguments that are used to back up this incredibly bold claim.
Okay, so to really get this argument, we've got to go back to the beginning, back to crypto's origins and what the source we're looking at calls its fundamental broken promise.
So the source basically traces this whole timeline. It starts way back in the 80s with this academic idea for anonymous eCash. Then, boom, 2009, Satoshi Nakamoto mines the first Bitcoin, and a whole movement kicks off. But where does it end up? Well, according to this argument, it lands us right here, in the present, with an industry that's way more about wild speculation and high-profile failures than any of those original ideals. And this slide, wow, it just perfectly illustrates that whole broken promise idea, right? On one side, you've got this utopian dream that was sold to everyone. Currency for the people, freedom from banks. But then on the other side, you've got what the source says is the grim reality, an unregulated casino where insiders get rich, a world of hype, scams, and collapses. So the big takeaway here is this idea of a fundamental bait and switch. A tech that was promised as financial freedom, but, in this view, became a machine for pure speculation. All right, let's get into the first major pillar of this whole argument, the claim that crypto actually fails at its most basic job. Being a useful everyday currency. And to make its point, the source asks a really simple, really practical question. Can you actually buy a coffee with Bitcoin? I mean, it seems basic, right? It's the ultimate test of its real-world utility. And wow, the numbers here are pretty staggering. We're talking more than a decade since Bitcoin was created. Out of 350 million businesses across the globe, the source says only about 18,000 accept it. That's not even a fraction of a percent. It's basically a rounding error. And the source uses this fantastic analogy to really hammer the point home. Technically, you could mow your lawn with nail clippers, right? I mean, sure, it's possible to use Bitcoin for some stuff, but just because you can do it doesn't mean it's practical or efficient or, actually useful in the real world. So what's the deal? Why hasn't it launched as a real currency? Well, the source breaks it down pretty clearly. The price is all over the place, transaction fees can be crazy high, fraud is a huge problem, and it all creates this vicious cycle, right? Nobody uses it because nobody uses it. The key idea here is that according to this argument, crypto isn't just inconvenient. For everyday use, it's functionally broken. Okay. So if the argument is that crypto is a failure as a currency, then what is it? The source then pivots to look at its other main use case, an investment. But is it a good one? Well, this slide really captures the insane risk involved. According to the data shown here, Bitcoin's annual volatility is about 60%. For comparison, the US stock market is around 15%. That means it's 4 times more volatile. That is an absolutely wild ride for any investor. And to back this up, the source brings in some heavy hitters from the world of traditional finance, starting with, well, maybe the most famous investor on the planet, Warren Buffett, and his, let's just say, scathing take on Bitcoin. The critique doesn't stop there. Here's Jamie Dimon, the CEO of JP Morgan Chase, America's biggest bank, and he compares Bitcoin to a pet rock. You know that 70s fad, something that only has value because a bunch of people just kind of decide it does, maybe for a little while. And finally, investor Peter Schiff kind of puts the cherry on top of this argument. The claim is that, look, a stock represents a piece of a real company. A bond is basically a loan. But with crypto, what's really there? The argument is that if you peel back all that hype, you find nothing. Nothing tangible anyway. And that risk, well, it has a body count. According to data from CoinGecko that's cited in the source, that's the number of cryptocurrencies that have become dead coins just since 2021. So what's a dead coin? It's a project that's just gone, abandoned, maybe it was a scam, or it just faded away with zero trading volume. They're basically the ghost towns of the crypto world, digital assets that are now totally, completely worthless. So think about what this means. The data here suggests that investing in a random crypto project is literally a coin flip. A 52% chance, according to this data, that whatever you invest in won't just go down, it'll go to zero. So the big takeaway here is that the source is painting a picture of crypto not as some new age investment, but as a good old-fashioned gamble, one with a really catastrophic failure rate. All right, so next up, the source takes a look at the parts of the crypto world that were supposed to be the safe and trustworthy ones, arguing that, well, they're also built on a pretty fragile foundation, a real house of cards. And first on the list, stablecoins. I mean, the name says it all, right? These were specifically created to solve that huge volatility problem we just talked about. They were sold as these safe havens, the place to park your money in the crazy crypto seas. But that promise of safety, it got completely shattered. This number, $45 billion. That's how much investor money, the source says, just vanished in 1 week. All when the supposedly stable Terra/Luna system totally imploded back in 2022. So if the stablecoins weren't safe, what about the major exchanges? The source points to FTX, and just look at all the reasons people were led to believe this thing was a rock-solid pillar of the industry. They had Super Bowl ads, Tom Brady, Larry David. They put their name on a stadium. They were backed by huge, elite investors like BlackRock and Sequoia. I mean, all the signals of legitimacy, they were there. But the reality, as the source points out, was a very different story. This quote is from the guy they brought in to clean up the mess. And get this, he's the same guy who cleaned up Enron. And even he had never seen anything like it. A complete failure of corporate controls. So the main point here is that even the safe parts of crypto were, in this view, just as shaky as everything else. A total house of cards. So after laying out this whole trail of broken promises, failed projects, and just catastrophic collapses, the source asks the big, final question. If it's so incredibly flawed, why is it still around? Why does it seem to be thriving? And here's the answer according to the source. The system isn't broken. Not at all. It's actually perfectly designed to do exactly what it's doing, fuel a non-stop cycle of speculation. The argument is that crypto sticks around because its flaws are actually its features. You see the wild volatility? That's not a bug. It's the thrill that pulls in the gamblers. The lack of regulation, that's not a problem. It's what lets insiders run those classic pump and dump schemes. From this point of view, it's a machine built to make its creators and the early birds rich, and it's all just dressed up in this cool, revolutionary language. It's the same old story of greed, just wearing a new, high-tech costume. And that brings us to the source's final, very provocative thought. The claim that this entire multi-trillion-dollar industry isn't a revolution at all, but a mirage. Something that looks real from far away, but just disappears the moment you try to touch it. It's a pretty powerful critique to think about as we all try to figure out what the future of money and value really looks like.